Yo, what's going on YouTube? Wanted to make this video as a weekly review of the trades that I took this week and that we took live trading, in the Discord. We trade live every single morning at 9 a.m. Central, 10 a.m. Eastern. We usually are streaming for 1 to 2 hours. Just depends on the market, depends on what trades we catch and all that fun stuff. So what I wanted to do is I wanted to go over every trade that we took this week, winners and losers. We did not trade Monday this week because it was a bank holiday. However, I do want to go over the price action on Monday because looking at it, in hindsight, there was definitely a lot more volatility than I was expecting for being a bank holiday. And I think there was definitely some opportunities to be had when it comes to trading this last Monday, even though it was a bank holiday. So what I want to do first and foremost is I'm going to jump into replay mode, and we're just going to jump all the way back over here to Monday, New York session open. So let me just go over here, put on replay mode, and this will kind of serve as like a little bit of a back testing and, obviously just going over the price action that played out this week. So I'm going to go to Monday. We're looking at E-mini S&P here. Monday, October 9th, obviously, and then we're going to go to 9 a.m. New York. So let me drop down here to, let's go to the 5-minute chart. And I want to go over the move. So looking at this price action, obviously coming into Monday, we see that we have a huge new week opening gap right here. Market gapped quite a bit, probably because of all the stuff that's going on, obviously with Israel and Palestine. So lots of crazy stuff that could potentially still be unfolding, and we'll just have to see in the coming weeks what it does. And I'm going to delete these markups and these drawings and just go off of what we see so far. So marking out opening bell with a vertical line here, 9:30 New York time is opening bell. So usually for me, I'm not really looking to trade until we get at least to opening bell, and usually most of the time I'll end up actually sitting and waiting for the opening range to play out, which is the first 30 minutes, of market open, because I'm looking to trade really mainly the silver bullet hour. So that would be 10 a.m. New York Standard Time. So I'm going to actually jump over to that, pretend that we did not trade the first 30 minutes of market open at all. Dropping down here to the 1 minute time frame and just jumping around the different time frames that we see. So looking at 10 o'clock for the silver bullet hour. Real quick, let me just jump back here. So once we got to this silver bullet hour, this is what I would have been wanting to see. I'd been wanting to see, obviously, one, did we get a sweep of some level of buy side liquidity? And we actually got it right at the beginning of this 10 o'clock New York time hour, because we saw a sweep of buy side liquidity, which was the opening range high, aka the high of the first 30 minutes of market open. So we saw this sweep of liquidity followed by a huge break of structure to the downside, and obviously some displacing price, right? So here's what I would have seen looking at price on Monday, looking at E-mini S&P. So after this displacement happened and we started working back up, I would have marked up my equilibrium from this swing high to swing low, and my entry would have just been placed right inside of that fair value gap, right on the 50% equilibrium. And I'm not sure if this came back and touched it or not. My stop loss ideally would be above this high, and then I'd be looking to target, ideally these lows, because I do kind of already know how price played out. I know that price never did come take out these lows, but I just want to see if this would have played out or not. So price did tap in there. A little bit of drawdown, it looks like. Sells off, breaks this initial structure. Probably would have been risk-free here for the most part. So let's see if I would have been stopped at break even at that point. Probably not. And then TP1, you could say, would be this inefficiency right down here if you wanted to do any sort of like partialing before closing this position. So let's see if that gets tapped into or not. Nope. So I would have been stopped out at break even here. But I wanted to point out something that I noticed after the fact. Again, like I said, I did not trade this day, but this is what I noticed after the fact, was that this would have been your probably best opportunity, is this 15-minute BPR. So 15-minute BPR, two overlapping fair value gaps. You can just use the smaller of the two fair value gaps for that entry. So in an ideal world, this would have been like your favorite best possible entry. And obviously, when it's in hindsight, it's always going to look really easy like this. But this is would have been probably a harder trade for me to catch. I don't think I would have caught it, if I'm being honest. I think I would have been more so short from that initial position and would have been stopped at break even more than likely. But just to show you guys how this all played out, this would have been obviously kind of the move of the day for Monday, which was a big range, pretty big range for Monday being a bank holiday. Like I said, that's why I was a little bit caught off guard and a little bit surprised. But anyway, now we can get into the actual trades that we took for the week. And I'm not going to go into bar replay mode for these. At least I'm going to try not to. I just want to show you guys the trades that we took. I left them here on the screen. So some of them are on NQ, some of them are on ES. I know it was CPI and PPI this week. So, we had a very good trading week for the most part. But we did take a loss on Tuesday, the next day, the first day we actually traded for the week on NQ. So on NQ on Tuesday, it was right here. So maybe I will actually jump into bar replay mode just so when I jump around time frames, it doesn't, take my screen all over the place. So this was the first trade that we took to start the week off on Tuesday. And just to show you guys a little bit of like what I'm seeing here, and I'll jump back even further here so you guys can see kind of the thought process. So the thought process for me was that the range that I have marked out right here, this buy side liquidity that we swept, to me, so this was London high, by the way, and I liked all of this sell side liquidity that was resting down here from, pre-market open, and I felt that like the draw on liquidity was actually going to be lower. So for me, when we took this buy side liquidity up here, and then we got this nice displacement down here on the 1 minute time frame, this 1 minute fair value gap is where we took our initial short entry from. And basically price does tap in, and we were in profit initially. We tap in on the next candle right here, and very nice reaction. So we sell off right away initially, and we tap into this fair value gap, which was a fair value gap on the 1, 2, 3, 4, 5 minute time frames. And I think married to the bias, I wanted to see price disrespect this fair value gap and sell off. And obviously that just didn't happen, because while this trade was playing out in real time, I was on the call saying, like, we probably could be going risk-free right now, because price, if it is bullish, will probably bounce here and go higher. But because I think I was just too married to the idea that, I wanted to see more profit on this trade, I just left risk on. And that obviously did not pan out, because price comes all the way back up, stops us out, and then ultimately does continue to the upside. And then I ended up taking a trade a little bit later in the day. I know I'm kind of giving it away already, but this was actually right before New York lunch, I believe, or coming right into New York lunch, if I'm not mistaken, is when I took this trade. So dropping back down here to the 1 minute time frame, and this was kind of crazy, because you'll see why here in just a second. But I had a pretty small target on this. I only was targeting 32 points. I was basically targeting this order block inside of this inefficiency right here. But as you guys can see, price had come up, ran out a bunch of buy side liquidity on the higher time frame, and then wanted to see price displace lower and break structure, which it did right here, leaving behind this 1 minute fair value gap. So this was where I was looking to get my entry with my stop loss above this high right here. I always give myself, a couple ticks, 2 to 3 ticks usually on NQ. On ES, 1 or 2 ticks above, whatever high that I'm using or low that I'm using for my stop loss, just in case price does want to come up here and tap, which saved me on this trade, which you guys will see in just a second. So I'm waiting for price to come back and pick me up, which it does right here. And then we just basically chopped around in this fair value gap. But this whole time, the bodies of the candles are respecting this fair value gap. So even though this is, not the most beautiful reaction that you'd like to see price tap in and go quickly, didn't really have that luxury, probably partially due to the time of day that we're in. You got to keep in mind, this actually didn't trigger me in until lunchtime hour. So this was a lower risk trade because it was a lunchtime hour trade. But watch what happens here. So at this point, I was going to go risk-free once this low got taken out, and we didn't get there. Price comes all the way back and actually almost stops me out. And I'm starting to think, I'm kicking myself like, oh my God, I'm going to get stopped out. I should have went risk-free sooner, or all this stuff's going through my head. But I let it go and just stick to my plan. And I kept seeing these candles, like even though it got really close to my stop loss, notice how the bodies are still respecting the fair value gap. Like that is such a huge sign. And then price goes back in my favor. And I removed risk, I want to say on this candle, I believe. I think it was on this candle that I removed my risk. But then you guys will see here, right once we get past this hour, price absolutely falls off of a cliff because an FOMC member started speaking. And I had my my take profit set right here. And like in this one candle where my TP got hit, if I would have just not had a TP set, this dropped so fast. I could have got so much more out of this trade because it kept going even beyond here. I mean, it just kept selling off the rest of the day. So definitely left a lot of money on the table with this one, but was able to mitigate the loss at least from earlier in the day. So, you know, can't be too mad about that. And then jumping back out here and going over to Wednesday. So that was Tuesday. I guess you could consider Tuesday a break-even trade, a losing trade, whatever. The actual live session portion of the trading day was the loss that we took. This came after that session was over. But going over here now to Wednesday, this trade came on the S&P 500, not on NASDAQ. So Wednesday we had PPI news, and as you guys know, if you've been following me for a while, I absolutely love the CPI and PPI news release days because they have just been really good to me, and I love the volatility that they bring. Jumping over here to this day here and marking out the silver bullet hour for New York, 10 a.m. So boom, right here, waiting for all of this to kind of finish playing out. Real quick, something to note here is when you're trading these days, what I like to do is I'm really paying attention to the extremes of CPI and PPI, and I'm looking for these extremes to be taken out, so on and so forth, right? So if I were to drop back down here, the news release candle of PPI is at 8:30 New York Standard Time, an hour before market open. So right now we're looking at the 5-minute time frame, E-mini S&P, and that's why I had this black line here. This is actually the low that I wanted to see price run for and get taken out. And I'm going to walk you guys through the thought process of this whole trade here in just a second. I'm going to delete this and keep our chart clean and just walk you guys through my thought process step by step here. So dropping down here to the 1-minute time frame, let's get over here to closer to silver bullet hour, 10 o'clock. So price starts selling off, and I'm anticipating this 1-minute fair value gap to be where we get the entry from, okay? So I'm anticipating price to come up into here, and that's going to be my entry. Stop's going to be, you know, a tick above this high right here, 5-point stop, and this is going to be TP1 right here. And then if you wanted to leave any sort of a runner, you know, you could, and I'll walk you guys through my thought process here in just a second. So I see price come up, and there's a fair value gap right here. Obviously, the reason I am not executing on that fair value gap is because it is not in or above equilibrium. So I want the fair value gap that is above equilibrium if I'm getting short, or below equilibrium if I'm getting long. But price sometimes will do this. It'll come up, fill just the lowest or the highest fair value gap, and it'll just continue, which is fine. If I see that happen, then that just means that I need to adjust my entry most likely so I don't get left behind. So I'll show you guys how I did that here in just a second. So basically I see price respecting that gap, looking like, you know, it's going to hold here. And I'm like, okay, so at this point, I'm not planning on this entry most likely getting filled. So what am I going to do? I waited for a little bit more time to pass, jumped up to the 5-minute time frame, okay? And then I saw this 5-minute leave behind this 5-minute fair value gap. So I said, okay, easy enough. I'm going to plan now on getting short if we tap into this 5-minute fair value gap. Stop loss for me above this 5-minute fair value gap candle. So only unfortunate thing is it added a little bit more to the stop loss, makes it like 6 points instead of 5 because we're jumping up in our time frames. And then that makes obviously this risk to reward not so hot. So I actually ended up making my take profit an even 10 handles. And so that's just how I went about doing it, so I could actually have a decent risk reward. My rule is if I'm going to be actually taking profit, I need to at least be over a 1.5 R. That's kind of like my rule of thumb, you know, per se. So basically Price taps in on not the very next 5-minute candle, but the one right after, taps into that and starts to sell off. We take out that PPI low, TP1 if you wanted it, or just going risk-free. And then from that point, we sold off, taking out that 10 handle mark, and it ended up being a perfect take profit. I'm going to say that I kind of got a little lucky on that, because we didn't really do anything crazy. We actually left equal lows down here, and my TP was not at like a level. It wasn't at a low. It wasn't at a fair value gap. I wanted a nice even 10 handle take profit, and that is in the recording from that session if you guys want to go back and watch it. But that was that, and then price does come back to that entry, but it does respect it ultimately again, even if you hadn't gone risk free and then wanted to hold it, because it did sell off a little bit further from that point. But at that point, was done for the day. Very quick and easy trade for the most part for PPI on Wednesday. And now getting over to Thursday, I believe this was on NQ now. So Thursday was CPI, obviously. And then, yes, we took it on NQ instead of ES this day. And I know that you guys are probably going to have questions about like, well, why are some days you're trading NQ and some days you're trading ES? And the answer really is just, guys, I'm watching both of these indices during the I'm watching both the indices during the day, during the trading session. But really what I'm doing is I'm trying to figure out, okay, if I'm wanting to get long, if I'm wanting to get short, which one is weaker, which one is stronger? Sometimes you're looking at the relative strength of the candles, and then other times you're noticing SMT divergence. So one thing that I'll point out here, and I'm able to go off of my memory because this week just happened, we had SMT divergence at the lows during CPI, the morning of CPI. So again, these big high impact news days, I like to target the extremes of these high impact news releases. So CPI candle releases right here. This is the high of that candle, right? And then you have the low of that candle, which is right here, already taken out, right? This is obviously the 1 minute chart. So I kind of consider this entire, move as part of that manipulation. But either way, usually these are two-part moves where price goes strong in one direction for like the first hour or for like the following hour of that news release, and then it's looking most likely most of the time to correct and go back the other direction and take out the other extreme. That's just been my experience. That's what I've noticed, and that's usually the way that I'm looking to trade these events once I get the setups right. So basically what we have here, I'm going to delete this. I'll just leave that on here for now. But basically we saw this SMT divergence. I was anticipating price to take out this sell side, but it didn't happen. ES had already taken out this low, so that's what created the SMT divergence. And at this point, I'm just waiting for price to displace, right, to give me an idea of where price is going to go, right? So I see price do just that right here. So price displaces up. We leave behind a 1 minute fair value gap right here, okay? So I'm initially planning on getting long inside of this gap, and I'm looking to target this buy side liquidity. And there was a daily fair value gap just above that was also being used as a target for us. So was initially planning to get long here, okay? Play this out a couple more candles. What do we get? We get, okay, price is actually continuing to displace. We just broke this high. We didn't sweep it. We broke above it, held strong, actually ended up creating a fair value gap over this high, which is also a breaker. Why is it a breaker? Because it's got a high, right? And a low. It put in a new high and a new low right here. Now we broke above it, fair value gap over top of it. This is a very high quality, high probability setup when you got a breaker overlapping a fair value gap with close proximity to a significant high or low, aka draw in liquidity. So what I did, had to make a little audible, had to make a little adjustment, and we went long inside of this gap because I was anticipating that this gap would not even get pulled back to. So my entry was this gap right here, and my stop loss below the fair value gap candle. Very simple, nice, easy. I think it was a 13-point stop I had on it. And then this was target 1 and then target 2 if somebody wanted it. I just had one and done. So I got in here and had my trade taken off there. But my plan was, guys, just to really reiterate this, if this trade would have lost, I still would have entered here again. So that was my plan. I would have entered here again anyway, but I'm anticipating that there's a high probability that price is not even going to get back here before going here because of the way that we've been treating the internal structure. So it won't always work out like that. This is one of the times it definitely did. Taps in a matter of a few minutes, price went and hit that target, and I got a nice little 1 to 2, a little over 1 to 2 on this. Thought price was just going to go rip right for this fair value gap. You guys will see that that's not the case. Price comes all the way back down, and it actually does tap into that initial fair value gap right there. So I didn't take this entry. There was one person, at least on the call, that said that they took this. They just kept their buy limit on from the original trade. So they got in here looking like a snipe entry right now. But price was so choppy later during this session that I was very uncertain on where price was going to go. Like, I'm drawing this bearish fair value gap. You see that that's respecting. Like, I was very uncertain. I'm like, man, I really don't know. I was leaning still more bullish because of we still had this daily fair value gap up here. We got equal highs now at that daily fair value gap. But I was very uncertain, so I just wasn't willing to put risk on for a trade just yet. Up until, not yet, I'm waiting right here. I'm like, oh, shoot, we might be shifting bearish yet again. And price does not come all the way back down to this gap. Instead, what does it do? I'm watching this bearish gap. Now I said, okay, if this gap can get disrespected to the upside, I would use this as a bullish gap, right, or an inversion gap. So I'm waiting for price to show me what it wants to do with this consequent encroachment. So I see the body's respecting it, right? I'm thinking, okay, we're going to hold bearish possibly. Looks like that's what we want to do. And that's what I'm anticipating. I'm actively saying this out loud on the session, thinking this in my head. And then once we get this candle to come back up, strong bullish, close above the consequent encroachment, that is when you are fair game to start using this gap as a bullish gap. Now turn as an inversion gap. You can either enter on the very next candle right when it opens, just like this, or what you could do is once you get a close above the gap altogether, you could then just adjust your entry and enter when price kind of retaps back in. But either way, I'd keep my stop loss right below here if you can. Either way, price does do just that. It taps back in. So even if you were going to do that, overlapping a breaker right here, and then price goes and takes out that daily fair value gap and then proceeds to tank the rest of the day. But I did not trade PM session at all. Just simply had this going on for CPI in the morning. So that was that. And now the last day to go over, guys, is going to be Friday. So it was pretty tricky, I'm not going to lie. And we waited for a bit to finally get like a clear entry. And I was neutral coming into the session. However, one thing that kind of tipped me off initially to one side or the other of the market was when we swept this buy side liquidity here on NQ, and you can just see we sweep this internal buy side and we have relative equal lows right here. So I'm thinking to myself, more than likely prices wanting to go take this out if we're showing that we're not going to continue displacing through this high. So once price failed to displace through this high and then actually made this 15-minute candle where we dropped down, I instantly was I turned bearish and we're looking for our entry to get short. And I found this 5-minute fair value gap right here where we wanted to get short from, and then price just never came back. Price never came back to that fair value gap. I'm like, shoot, this is now looking like it's running away without us. Gonna have to improvise yet again. So I'm scanning all the time frames, jumping around up, down, 15-minute, 5-minute, 2-minute, 1 minute, trying to find something. If I drop down to the 1 minute, you guys will see like this is actually very ugly price. You can just see it. It's just gross, right? Back and forth chopping. No, there's not really any fair value gaps or anything that you can utilize. Even the fair value gaps that are showing up, they're like not really respecting that much. You're more so better off like using these up close candles, these bearish order blocks. So that's what I ended up doing. Saw this bearish order block respect ultimately. I wasn't willing to take an entry here or call out an entry here because we still had this gap open up here. I'm like, man, if one of these fails, it won't take much for price to just come sweep this. And I wouldn't want to get stopped out here when I could have, just been a little bit more patient, got this entry. So instead, I wanted to see these candles respect. And then I wanted to see price, show me that it was going to go lower. So what I did is I waited. I did not enter on this one, or I did not call out an entry on this one. And then when we got this candle up right here, leaving behind this little 1 minute fair value gap, we disrespect it, use it as inversion. I'm looking at the bodies closing like this. And once we got this candle down, and then this candle was working down as well, it was pretty obvious to me that this was going to respect and we were going to head lower. We're not going to get back up in here most likely. So that's when between S&P 500 and NASDAQ, both of them kind of had similar setups. ES, I think, was a little bit cleaner maybe just because of we actually had some fair value gaps. But it's neither here nor there. This 1 minute order block, it's also an order block on the 2 minute. This was the entry that I called out, and then stop would have been above that candle, and then price sells off. Target one was those equal lows right there, and then another 1 hour low right down here on NQ. So the two targets, one, these equal lows right here, 15-minute time frame, they look a little bit more prominent. And then the other target was right here, these lows down yonder. And then that was it, guys. So that was all the trades for, this week. And it was a good week overall. So Monday obviously didn't trade. Tuesday was either a slightly red day or a break-even day, just depending on if you caught all those trades, both those trades or not. And then you have CPI and PPI days. Great. Friday, great. All winning potential trades if you took the trades, were on the sessions, etc. But guys, yeah, I do these sessions with the Discord Monday through Friday, just depending if there's any news or anything like that. If bank holidays, usually I'll take off, or if there's like an FOMC statement, or if Powell's speaking, I'll take off. Other than that, I'm looking to trade pretty much every day, Monday through Friday, during the silver bullet hour in the morning from 10 a.m. to 11 a.m. or so during the New York AM session on the New York time zone. So yeah, guys, that's that. If you guys want to be a part of the Discord and trade live with our group and myself every single day, the link will be in the description of this video. And obviously, if you guys want to trade right here on TradingView through a prop firm and get funded, the one that I recommend is Top Step. If you guys use the link in the bio, it'll save you 20% off your first month in the combine using them, and it's really the only prop firm that I trust. It's the only prop firm that I would ever endorse or to tell you guys to use. You'll never hear me endorsing any CFD Forex prop firm for that matter, and I'm not going to get into the details of why. It should be pretty self-explanatory, but either way, guys, do your own research, pick whatever broker or prop firm that you like the most and the one that you want to use, guys. But hopefully this video was helpful in some way, shape, or form. I know it was not super organized or anything like that. I really just kind of wanted to, off the cuff, just like shoot this video and not do a whole lot of editing, just have one take, like, here we go, this is everything. And I know that we went from replay mode to not replay mode, and I know that I kept the drawings on the chart from all throughout the week. But hopefully this video was helpful for you guys. If you guys do have any questions about anything, feel free to drop them in the comments below, or let me know what type of content you guys would like to see next. I would really like to put out more content for you guys. If this format is helpful for me, for you guys, for me to do a video like this every single week, just kind of going over the trades that we took, the thought process behind those trades, and then kind of like also my thought process now that the day is over, the week is over. It's always nice to be able to go back and look at the moves that took place, and then obviously look at the trades that you took and, honestly assess things you did well, maybe things you can improve on, or all that type of stuff. But all in all, was a good week. It's been really, really good ever since we've gotten, like a week into September. The fall price action and price delivery has been very, very good to us. And it's been a lot of fun trading, this fall so far. So no complaints over here, but hope you guys enjoyed. Let me know if there's anything else that I can do for you guys. Let me know if you have any questions, and I will see you guys in the next video. Peace out, y'all.